Welcome to Markets Now. I'm Michelle Rook with Chip Nellinger, Blue Reef Agri-Marketing. Livestock futures are mixed. You've got cattle back to the plus side. Hogs are seeing a little pressure, and then we're quietly mixed over in the grains. Row crop seeing maybe a little pressure with the wheat market to the plus side. And not a big correction in the soybeans here, Chip, but just a little bit of profit taking because we have run into a little chart resistance here, haven't we?
Yeah, we really have. Up in these low 1380 range on the January bean futures is some retracement up there and some previous resistance. We've run into there a couple times. It stopped us in our tracks so far. The market's a little bit nervous. It looks out here a week out, and it's showing a little better rainfall potential for some of these dry areas of Brazil. The market's, it's too far out to really get a good feel for whether that is a total pattern change or just a one-time rain, and then we flip back to this hot and dry pattern they've been in. So with that uncertainty of the forecast, a little bit of rain in the extended, I think maybe the bean market saying we've gone far enough for the time being, put some premium in there, but before we extend maybe up to or above 14, we got to make sure that this hot, dry pattern is going to stay well into December.
Yeah. Soybean meal also correcting there. Were we due for some profit taking as well after contract highs yesterday?
Yeah, that spread is pretty well extended in here. The long meal, short soy oil. You saw some strength in some of these, world vegetable oil markets, and that spurred some profit taking in that spread. So, the meal down sharply, the oil up sharply. I guess the take home with that is at least something's rallying. The crush margins are still strong, and on these little intraday breaks, it seems like the commercials are there to buy it, at least the crushers, because their margins are still there. So, meal's been the big leader and the heavy lifter, but as long as we're going to have, the soy oil gain on the meal and keep the crush margins positive, it's probably good from a commercial buying standpoint.
Yeah, and that meal oil spreads flips back and forth depending on the day, obviously. So what is your assessment of the South American crop? The last time you and I talked, you said it was too early to be putting in South American weather premium and that we may not see things get explosive until, Thanksgiving? How bad is it in South America?
Yeah, I think that's what the market's trying to figure out right now. And, you have to understand that the sheer size of that growing area, not only north to south, but east to west, it's massive. So, there's different problems in different parts of that country. Too hot, too dry in the northern two-thirds, way too wet in the south. And I think the answer to your question, the market is trying to figure that out. So, I remember a couple of weeks ago we talked and said, hey, if this lasts into the mid part, this week and the week of Thanksgiving, it'll become much more serious problem. And we're kind of right on that fence right now. So, I think that the market's trying to figure that out. And I think once we get into next week, we'll know a little more. We'll know whether this rain event that's forecasted out here a week out hit, how widespread the rains were, and then what the extended looks like out into the first part of December. If it's still on the hot, dry side into that first week in December, I think you have a whole nother leg of weather premium being added to this bean market. And so I think you're kind of at that stage that it really matters. The next 3 weeks really matters, and the market will try to figure out how much rain they get, what are the temperatures. And so I think that's a moving target in the market's mind right now.
Yeah, the market, though, also looks at some of these private estimates have gone down and they're not going up, at least.
Yeah, there's no doubt about it. I think you take what their maximum potential was, and it's no longer there, just simply because of how late it's gotten. And even the beans that are in the ground, you're starting to see pictures that really look, ugly on some of the production prospects. Now, again, massive growing area there. So, it's like the United States. It's dry in the United States. Well, how big of an area is that? But it is I think, a major deal. Does it mean they're going to lose 20-30% of their production potential? I don't think you can say that just yet. But if you push this into December, then you're talking about maybe a more real larger drop in yield potential.
Yeah. Corn market, since you and I have been talking, we have been on both sides of steady. But the fact that the wheat market is up, crude oil is up as sharp as it is, and you've got the dollar down as hard as it is, this is kind of disappointing, especially after you score a reversal yesterday. So not a lot of follow through here, right?
No, it really isn't. It seems like corn has kind of taken over as the the new wheat. You know, I mean, I don't know how many times wheat's tried to bottom and had a big reversal day and just couldn't follow through. And now corn is kind of taking its cue from that. So far, less than stellar follow through to the upside on this big reversal from yesterday. I think you mentioned something that's very important. We saw a CPI number come in way cooler than expected. And so the dollar index, massive drop today down into new couple month lows. I think if that follows through to the downside into the end of the month and the start of the new month, then that could be something that maybe pushes some money flow into commodities. And in the same breath, the funds have a big short position built up in corn and wheat. And if you see some money flow coming in, that might be enough to spur them out of their shorts in corn and wheat into month end. And that could be something that gives us some upside potential, along with this weather uncertainty in the Southern Hemisphere.
Yeah. That pullback in the dollar, though, is that really the only reason wheat is up today?
No, I don't think it's the only reason. You know, I think wheat slowly on its own had been trying to put a low in, but it's just lacked a spark to, you know, push the funds out of their shorts. But I think the take home for me is, at least in the Chicago contract, we've gone several weeks now without making new lows. And so the longer we go, that just puts that big short position from the funds in more and more jeopardy of them coming in out and saying, hey, it's been a nice ride. We've made a ton of money being short. Let's get out of this thing as we get closer to year end and ring the cash register and get paid on our short wheat position.
Yeah. So cattle market is also up, and I'm sure that's partially on the heels of the stock market also reacting to that CPI news, right?
Yeah, huge move higher in the stock market. We'd had a big move off the lows from a week or so ago, week and a half ago in the stock market. So that was already in progress. The CPI report this morning, you know, has a lot of buying in the stock market, maybe taking some of the fear out of the cattle market. I think the other thing is, you know, obviously the funds have had a major liquidation event in both live and feeder cattle. And maybe, just maybe, fingers crossed here, they've gotten, you know, the liquidation accomplished, and we pushed it, at least for where the cash market looks like it's going to trade, we pushed the futures below fair value. Now, if we can kind of stabilize the ideas about this economy and get the cash market stabilized, I think the futures can snap back and you know, even follow through on today's strong gains going into the end of the week.
Are you sure about that? Because, you know, we have that cattle on feed report coming up on Friday. That was part of the catalyst that started this $23 sell-off on the Feb live cattle contract here about a month ago. Placements are looking like they're going to be higher again. So can we hold this together if that comes to fruition?
Yeah, that's the question. You've done enough damage on the charts technically that I think producers now are definitely in a mindset, if they weren't already, we got to sell rallies and get more serious about, you know, managing risk to the downside, because there is a lot of risk there. And so there's going to be a lot of overhead resistance on this rally, to your point. I do think that obviously the market typically does a pretty good job of kind of predicting and digesting these cattle on feed reports, but we'll have to see what the numbers come out. I think if they're close to expectations, even if they're bigger than a year ago, we might have kind of got past and through the worst of that potential cattle on feed number.
Yeah. Hogs are going the opposite direction of cattle today. Is that just cattle hog spread action, or did the hogs run up into chart resistance too?
I think a little bit of both. You know, obviously when you've had these big moves, there's still a lot of money that trades, you know, the hog cattle spread. That's pushed out to some historic levels there. But I think it's a combination of both, a little bit of spread evening up, as well as I think he did run into some resistance on the chart in lean hogs. We've kind of put a pretty choppy 2 or 3 week kind of sideways sloppy range in here. So I think the market's trying to get some, you know, catch its breath and figure out fundamentally which way we're going to break out of this. And if it's either way, I don't think it's a move you really want to fade right now. But unfortunately, there's a $3 or $4 window in here where we're just slopping back and forth in this sideways range.
Okay. Good to see you and talk to you as always. Chip Nellinger, Blue Reef Agri-Marketing. That's Markets Now.